In today's tutorial, we're going to take a look at bullish divergence. Now, we've already got a video on bearish divergence, so please make sure you check that one out as well. And in this particular video, we're going to focus on bullish divergence and some signals that we can see in the market and that are very helpful and powerful for you to look for as well. Now, as we mentioned in the other video, bullish and bearish divergence are very powerful signals. Usually, they can't be programmed in, or it's very difficult to program them into MT4 and other trading softwares, but as a visual cue, they are fantastic to look for. You want to be doing that on a regular basis because they're such a strong signal. A lot of traders do actually focus on trying to find these bullish and bearish divergence signals. So let's take a look on the chart here at the moment. On MT4, we've got the euro dollar on the hourly chart, and there's one screaming at us in the middle of the screen here. Hopefully you can see it, but let's just cover what bullish divergence is. In this case, what we're looking for are the lows on the chart, the price action. We want them to be hitting lower lows. As you can see here, the lows are getting lower through here. And then on the indicator, usually an oscillator, in this case I'm using the stochastic, a 9 period, and you'll notice that the stochastic is hitting higher lows, as you can see just through there. So that's the divergence there. The price action is diverging from the indicator, which is the powerful signal that we're looking for. So as the price is falling away, we start to see the Forex pair is being accumulated, which is a positive sign, and it's starting to push higher. So this is our signal here. We could take the signal just through there because that is a bullish divergence signal. Now you'll see it is in a bit of a roaring downtrend. That's a 100 period moving average. So if you're willing to trade against a trend, you need to keep that in mind. Typically, these signals are most apparent when a market is going down, especially for bullish divergence, of course, because we need it to be hitting lower lows and the indicator to be hitting higher lows. So through here, you'll notice that we've got a couple of signals. The first one, that's one bullish divergence signal just through there. So you could look to enter there. And if you did, depending on where your profit target is and your style of stop loss, you may have actually got taken out at a loss as it fell away against you. If you look to set a profit target maybe at the previous highs, may have just missed it, or you may have just got an exit in there. I don't know your particular exit strategy. However, there was another signal just through here, and of course I've given you a good example of how it works. So the market's fallen away. There's two signals through here. One, perhaps it didn't quite work out, and the second signal is even stronger. As you can see, the subsequent rally from there is fantastic. So this was a signal where we've got 1, 2 successive higher lows, and then we've got the lower low through there, entry signal on the bullish divergence through there, and then the market rallied accordingly. Now, depending, once again, I keep referring to your exits, your time frame, and those types of things, because that will determine how much of the opportunity from the low to the subsequent high period, or even through there, that you captured. I don't know that, and this is just a hypothetical trading example here, so please keep that in mind. All right, let's have a look. We'll move across to the Aussie dollar now, and once again, in a downtrend, the lows are getting lower just through here, and the divergence on the stochastic again, higher lows just through there. So that would be your bullish divergence signal just through there. Once again, this one you may have, depending on where you got in, if you waited for confirmation on the turn, you might have got in somewhere through here. And then perhaps if you moved your stop to break even, you may have actually got taken out at break even, or maybe at a small loss. Perhaps you held on, and then yeah, there's another tricky one through there where there's a long wick on that candle. You may have set profit targets up at the recent highs. So there's a number of ways you can play divergence. So in this particular case, maybe not a very strong signal. However, it was a bearish divergence signal, so there was an opportunity to take. How much of the opportunity you got will be determined by the type of your stops, how close your stops are, whether you're trailing it or whether you hit profit targets and so on. So hopefully a couple of good examples there of bullish divergence and what you're trying to look for when it comes to bullish divergence. So hopefully you can use this as part of your trading strategy. Once again, this could be an excellent profit taking opportunity for short positions. If you're already short through the market here, and then you did notice this bullish divergence signal, that would be your warning sign to maybe exit a short position on the Aussie dollar in this case here. So that's another way that you could use bullish divergence also to exit the trade. Hopefully you found this tutorial on bullish divergence helpful. If you did, please give it a thumbs up, and all the best with your trading. Thank you.